Welcome to the Debt to Financial Freedom podcast. I'm your host, Victor Lagos, and the founder of Lagos Financial. I've been in the finance and lending industry for 16 years, and I've personally made financial mistakes and learned from them. I started this podcast to share stories and lessons on my own journey and to share insights that may help others on their journey. And I interview people that I've connected with that share the same values and mission to help others create financial freedom. My goal with this podcast is to share raw, honest, transparent, and helpful stories that you can relate to and inspires you to take control of your finances and only have debt that brings you closer to financial freedom. Everything on this podcast is general in nature and for education purposes only. None of your personal objectives, financial situation, or needs has been taken into consideration. I highly recommend you seek personal, financial, legal, taxation, and credit advice before you take any action on what has been heard on this podcast. Welcome to episode 2 of the Debt to Financial Freedom podcast. I'm your host, Victor Lagos. Today I'm excited. I've got a pretty good guest, friend of mine, my buyer's agent, my personal buyer's agent, Joe Tucker. So for those of you who don't know Joe Tucker, he has his own buyer's agency called Property Principles. And he is a co-founder of the very famous group, Oz Property Investors on Facebook, which, correct me if I'm wrong, Joe, it's got about 27,000 followers now.
About 30,000
30,000. Okay, wow. Impressive. So, Joe, welcome.
Thanks for having me here. This is awesome. I feel like we've spent so much time together as well. It's just literally, it's good to catch up and it'll have the guests listen in.
The funny thing is we really got to know each other over the phone, and after a while, it kind of felt like we'd known each other for ages. You know, we're just always checking in, give me the property deals. And, you know, actually the main reason I wanted to get you on this show was because it was such a good buy. And I wanted to just share that to my audience because so many people don't understand how does buyer's agency work and why would you use one? And I can share my story and I want to share how you actually helped me. Like you helped my wife and I a lot. And, but before we get to that, actually, I wanted to maybe just hear a bit of your story and then I can sort of go into mine and how you helped me.
Yeah, awesome. Well, it's awesome to be here. And I think that buyer's agents are not for everyone. Like using a buyer's agent isn't the most be all and end all of everything. You can go out there. Like we've created, like you said, Oz Property Investors. It's about investors getting out there and doing this stuff themselves. Yeah. But yeah, my story's a bit of an interesting one. So my first deal was through a buyer's agent and was terrible. It was a terrible mistake that I made to go down the buyer's agent route, this specific one. But it taught me a lot of lessons about how to actually buy property. So back in the day when I was getting my first investment property, I had about $60,000 in savings. And even in 2018, that's still not a lot of money to be able to go out there and buy. So I actually used a guarantor loan in a bit of a different way than normal to buy a property. Okay. So one of the things is I met a bit of a mentor of mine who bought investment properties throughout Sydney. He was getting renovation projects and he was buying a property that was under market value, adding value through a renovation, and then withdrawing the equity, which will allow him to go again.
So instead of selling it, he was actually keeping it and extracting the equity.
Yeah. I mean, you don't have to sell the property to get the equity out. That's what I learned. I thought you had to buy, reno, sell, and then accumulate the money and then buy a better house. But for me, I only had $60,000. So for stamp duties and legals and a deposit, that's not enough to do it. So instead, I asked the question, how can I make this happen? Like, how can I continue my investing journey? Because right now with $60,000, I can only buy and hold, and I'll have $0 left for a renovation. So instead, I actually utilized the guarantor loan, which was from my parents. So I'm very grateful for that. It's amazing. I like to think about it as not so much a handout. They didn't give me $60,000 on top to help me through, but they gave me the ability to leverage off of their property to go in and purchase my own deal.
Yeah.
That then left me with $60,000 to do some renovation work on the property and also pay for stamp duty and everything like that.
Yeah. That's a good play. And not all brokers know how to do guarantor loans either. They're a little bit confusing.
Oh, yeah.
Not all banks will do them. And especially not all banks will do them for investment properties as well. Or did you buy it as an owner-occupier?
No, it was an investment. It was absolutely an investment. Yeah. Okay. Yeah, it's interesting. I can't remember the bank we used, but I had a great broker at the time that helped me through all of that process for sure.
Awesome. And just so audience can understand, at what point did you realize, you know what, I want to help other people on that journey to financial freedom because I've figured it out and I don't want to keep it in. I want to share it with other people.
Well, it was the experience that I had of using my first buyer's agency that I went with. And essentially, it was the coolest guy. He spent hundreds of thousands of dollars on media and marketing. He had all the Facebook ads. He was on all the podcasts. He had a slick suit, slick hair, the best looking guy. And you just think, oh, well, the media perception is he's the best. And then I engaged his services. He ended up finding me this amazing hotspot location in Queensland, a place that I'd never heard about. And deal done, happened in a couple of weeks. And it started to unravel when I actually flew down to the property and checked it out because it settled. And I flew there the day it settled to pick up the keys. I was expecting to do a $10,000 renovation, $12,000 renovation, and that would help me release that guarantor loan. But I didn't do the due diligence. I handed my financial future over to this guy. And that's where I think people go a little bit sideways. And this is why we created the group, is because you've got to get educated on property first. Don't just call up a buyer's agent. I've heard about buyer's agents. I need to just someone else. Here, take my financial future. Here, take the keys. You drive. You need to still be the one driving. So I didn't do that, big mistake, and ended up with a dud property. On the day of settlement, I was walking up the stairs to go in and check the property out. They were the stairs that I had to pay $12,000 on to fix. $30,000 later, we got the property for $280,000, $30,000 on the reno, and that got revalued at $310,000. So $1 in and $1 out in equity, but that pretty much just locked my money away. So what I learned from that was not every buyer's agent is the same. If it's a massive, large scale buyer's agent, it may not be the best fit for you. Like, you want to have communication. You want to make sure that they've got your incentives aligned as well. And make sure that they're not getting any kickbacks or referrals from anybody. That's a big one. Ask the question, hey, how do you get paid? Is it just me that's paying, or do you get paid by mortgage brokers, conveyancers, property managers, and those type of things? Who's going to be doing the inspections? Because the real estate agent did the inspection. So they got the camera and were going up, down, left, right, moved all the bad stuff. And it's only until then I realized, when it was too late, that it was too late, and I had a crappy deal.
Wow, actually, I did not know this part of your story. So no, thanks for sharing that. And I feel like there's a lot of people out there that have gone through something similar, where they were sold the idea. Someone had really good, content out there, and they were, all over the shop and in terms of social media. And more importantly, they were sold the dream or the idea of financial freedom. And after a while, they realized that they were sold at that.
Yeah.
And many of them, it ends their journey.
Yeah.
And I say this to a lot of people: the first property you buy can either make you or break you.
Yeah, it is the most important one. The most important one is the first one, then the second one, then the third one. Yeah. And then once you get to 5, you can be a little bit looser.
I'd like to get to 5 with your help.
Well, we will. We will be getting there. And I think that that's actually a good point as well, that you need to think, and this is the broking side of things. You're a broker, so it was awesome to, have these in-depth conversations about strategy and structuring, because the way I like to think about it is, what is this deal got to be to allow you to get into the next one? So you don't just look at the first deal like, oh, great, I've got a $600,000 borrowing capacity or an $800,000 borrowing capacity. Should I just buy one property? No, if your goal is to get to 3 million over the next, however many years, you need to be strict and structured about lining up the right properties at the right time.
Yep.
Because if you get a cash flow here and a growth here, it might not give you the leverage to get into the next one.
Yeah. It's a good point. And just understanding where you are on that journey. you might talk to someone that's already got a few properties, so then you kind of assess their portfolio.
Yeah.
Or you might talk to someone that's buying their first, and it's about understanding what are their goals in the short term and in the long term, and what's going to help them achieve that.
Yeah.
And balancing that with the right property, right strategy, and obviously the right finance structures.
Absolutely. Well, that's what I found interesting about your story, because you have got a great financial background. You're a brokering of the amazing Lagos Financial. Why did you decide to use a buyer's agent? Like, what was it because you already bought property previously to this.
Yep.
What made you go, hey, I need to use a buyer's agent this time?
Look, it's a good question. Thanks for asking that, because a lot of people, they want to go out and do it on their own, and I was one of them, and I did. I spent probably about 2 or 3 months, maybe a bit less, researching the market. Like you said, it's about getting educated, right? It's not just jump in here, take my money, find a property for me, and I just, do my own thing. You got to know what you're looking at so you can guide the buyer's agent the right way. So I'm still glad I bought the first one, because I learned a lot. And so basically what the time was around lockdowns last year, September, or a little bit before that. So everyone was inside, right? Couldn't really get out there. So I spent that time looking at other markets. And to be honest, my wife and I, we weren't actually fully thinking about pure investment. We were thinking, where could we move to? Because obviously Sydney was locked down, and we're like, where can we actually have a better lifestyle that's more affordable? And everyone was buying in Queensland, in Melbourne. And we thought, where can we buy somewhere different? And Tasmania came up. So I looked into Tasmania, different suburbs, and I started talking to property managers. And it wasn't just a random property manager. I actually went online. I looked up a property manager that actually had good reviews. And I spoke to her, and the ones that are responsive, because when you deal with professionals, you want to make sure that they're actually going to be responsive and come back to you. So the first one that came back to me, I talked to her. She was great. She told me the suburbs that I should probably be considering around that price point that I was aiming for. And but it was tough. I got to say, like we missed out on 3 properties and we won the 4th one.
Wow.
And it was a hard market because everyone was offering much more than the guide, to win, right? So we lost on price.
Yeah.
And
that's the case.
And in Tassie, like you can't just put an offer in like in Sydney, or here's an email, this is my offer. Like you have to sign a contract with all your conditions, and it has to be witnessed. So you can imagine when you're stuck at home, how do you do that? Like
yeah,
you have to print and then sign. I have to get my wife to sign, to witness, and send that off to the agent to see if they'll accept the offer.
Bloody nightmare.
But I'm glad the 3rd one, all 3 didn't go through, because the 4th one was a great one. So we bought, and I thought this was a great investment until the next one, which you helped me with, which I'll get to. So this was, we bought it was in Launceston. It was a 3-bedroom, 2-bathroom on 1,100 square meter block. The starting price was about 500,000. We ended up winning it at just over 600,000.
Well done.
I was very happy. It's a good property. It's a bit outside of Launceston, but it's got potential. And I made sure that it was an area that had some potential for growth. So there was a bit of new development around the area, but this was an established property. It was brick veneer, still is brick veneer. It was, and it rented out for $560 a week. So it was a decent yield, 5 and a bit %. So that was good, because firstly, what happened was we revalued it. After about a year, it became, we found out that it went up by close to $100,000.
Crazy. Well done.
It was just the market, to be honest, but it was also buying the right location.
Yeah.
We then extracted the equity. So we borrowed the money, took that out, and used that as a deposit to buy another. And that's when you and I connected. And I thought, you know what, I'd like to work with a buyer's agent this time around. First and foremost, I didn't have the time. So I was working in my business, and I knew that I wanted to buy in Adelaide. I just didn't have time to research where, didn't have time to talk to agents. But, when you and I spoke, we got a better understanding of what that looked like. And that's the thing. You got to be clear about what it is that you want, right? And I shared that with you. You went out looking for it. And look, I'll pass it over to you, because, tell me what you did to help find us that place, because it was a cracker.
Yeah, no. Well, to give people a bit of context about the deal, so this is in a suburb that we are currently buying in. It is a good growth location. It is doing incredibly well. It's done incredibly well. So we purchased this property for $518,000, and it was after some negotiation. So we'll walk through a step-by-step process of, I guess, unpacking the deal. So the deal was purchased at 518, but we did some negotiation. So in South Australia, and this is the importance of knowing the market that you're buying in, right? You need to know what you can and can't do. So in Tasmania, it's a little bit different. In New South Wales, the rules around negotiation are different. Cooling off period, if you pull out of the cooling off period, you've got to pay 0.25%. In Queensland, it's a little bit different. In WA, they don't even have a bloody cooling off. South Australia, they've got a 2-day cooling off period that allows you to pull out of the deal for whatever reason. You know, my cat doesn't like this property, I'm going to pull out. So you can use those type of things to your advantage. So what we did on this one is, instead of having a pest and building clause in the contract, we did it so we did the pest and building during the cooling off, during the 2 days. So you've got to be quick with that. You've got to have the right people in the right locations to be able to do those pest and building inspections. So you've got to organize that quickly, but it makes your deal a lot more cleaner, if that makes sense. So we negotiated down, which we'll chat to in a little bit, I'm sure, $508,250, and it's renting out at $670 a week, which is a 6.8% yield. Not in a flood zone, no easements, no fire. We do all the due diligence, obviously, to make sure that that's happened. There's no covenants on the title. So if you want to subdivide into the future, there may be that potential for you. You've just got to get all the council, everything like that. But an unreal deal. Absolutely, absolutely mental. But the reason why we got that is, and I guess this is something to be aware of, is I'm doing this every single day. My full-time job is finding, negotiating, securing properties, and people out there in the marketplace are against buyers. Like, they're against me. Like, this is my competition, and I'm your competition if you're going out there to buy it. But I always say, if you put a part-time effort into something, you're going to get a part-time result. So you do have to put a lot of hours in to get those deals, to build those relationships with the agents, to get that. And that's exactly what we did with this agent here.
You know, it's funny because I do share that with a lot of people who ask me, like, why did I use a buyer's agent? And it's like, well, it's not just the time, because that was obviously a big benefit for me too.
Yeah.
It's because I know that a real estate agent is going to look at selling that property for most of the time the highest price that they can get, right? But they're going to think about it commercially, so that if they're building a long-term relationship with you as a buyer's agent, they're going to get future business if they do right by you, right? So, and they're also going to be more transparent with you because you speak the language, right? You understand how it works, how to price it, how to negotiate with buyers and sellers, etc. So if I called up a real estate agent who was interstate, I'm just a one-off buyer, right? I'm an interstate investor.
Yeah.
So why would they want to give me the best deal and be transparent with me when they can do that with a local buyer? Or they can try to get a higher price with local buyers. So if anything, they'll probably try to get me to pay more, right? Because they can't see me, they can't meet me.
Yeah.
And it's a one-off transaction, they'll never meet me again.
Yeah.
So that's where I think you really leverage that. And we're able to find out, a rough estimate of what I needed to come in to win, right? Because an agent can't tell you directly what the price needs to be, right?
They do sometimes, not all the time, obviously, but it is illegal for them to tell you that.
They shouldn't, right?
They should not. Yeah. They should not. But I think what you were talking about before of, I just don't know, the agent would put, 500 to 560 on the guide price or whatever the number is for whatever the property is. Yeah. But you need to be an area expert and know so well what your walk away price is. So for me, I set my own target price of, I'm not going to buy this property like this one here. I think it was, we worked it out to be valued at 540,000 or 400 where did it go? 530 or something. And our walk away price was 525. Yeah. I might be messing up the numbers there.
Well, this is what I like about you as well, is that when we were talking about this, you wanted to get me a deal that you were able to, well, first and foremost, it had to be in an area that had growth, right? And a decent rental yield. Like the $670 a week, that was like, icing on the cake, right? We didn't plan to get that much rent. That was just, really, really good deal, right? But in terms of when you were looking for the deal, you wanted to get it below market value. So you weren't just going to go in and say, let's get the best price and buy it at market or above. Yeah. Right?
That's easy to do. Like
anyone can do that, right?
Anyone can walk in and do that.
And because I'm a broker, I've got access to tools to tell me what properties are worth based on bank valuations, right? Rather than API data, CoreLogic, that's a guide. But my one is like, what will banks lend against? So I checked that. And it just so happened that it was worth $569,000, right? So you got it at 518, that's what, 30, 40 grand, something like that, below market. Well, on top of that, during that window you talked about, 2 days, there was some work that needed to get done, right? So owner occupiers who, this area was more owner occupier than investors. So people who did go check the property out probably wanted to move in. And because there was work that needed to get done, they were probably thinking, how much money do I need to spend before I can move in? Or if I'm renting, I gotta like pay double rent and a mortgage while I renovate, blah, blah, blah.
Yeah.
So that then meant that we were able to get the property at X amount, 518.
Yeah.
But then during that window, you organized the pest and build, and I didn't know who to contact, but you knew someone on the ground. They did a really thorough job. And then you leveraged that, went back to the selling agent, and then they then said, X amount needs to be repaired. Yeah. So you did. You said, this is the cost. And we dropped the price by like $9,000. So we got even further discount.
Yeah, right? Yeah. Well, I mean, that's what we're doing. Like communication is the most important thing, and setting it up so that the agent knows. You also have to find out what the value of things are. So one of the things was there's a bit of rust on the gutters. Now, I know that the gutters were fine. The pest and building guy said the gutters were fine, but I think they might need to be replaced. So we got a quote for how much it cost to replace the gutters, how much it cost to fix the garage at the back because it had this false wall built in for nefarious activities. So we had to remove that and fix the electrical in there. So all of a sudden I speak to an electrician, hey, how much does this cost? And you start to build a case of justifying that $9,000 discount. So the negotiation came in with, hey, Mr. Vendor, I would love to buy this property, but we bought it on the proviso that the gutters were fine and all of these things were fixed. So, please give us a discount for that amount. But you kind of build it so it was $15,000 of works. But we're going to come to the table and discount it, and it'll only be $9,700. And then you get it all fixed, and it's $8,000 or $6,000 or whatever it was.
I actually want to touch on that because something that's important to me is transparency, and also just sharing things for what they are. Being raw. And I want to share this to the listeners because, some of you might be thinking, well, I want to get a deal like this. Sounds awesome. 670 a week, 6.8%.
Yeah, I can't promise these type of amazing results.
Well, you can't because this was a rare case. It was actually a mortgagee in possession. Right? So the bank had taken possession of it, and it wasn't being sold by the original owners. So their incentive is just to get it sold quickly and for a reasonable price, right? They don't want it to be, let's get the best price and keep it on the market for too long. They just want it gone. And of course, the the original borrower obviously wants to be debt free as well because they're being charged default interest and all these extra fees. So it's important that it's gone quickly. So that's why it was in a bit of a rundown state. But it wasn't just run down. That nefarious activity you talked about, what we found out when we did the pest and build, is that there was a shed that had previously been used to grow, cannabis or weed. And I find it funny because when I saw the photos of it, it was actually done quite professionally. They had power in there. They had lining inside the shed. I had to pay to get that removed because I didn't want to give the new tenants any ideas or take on any risk.
Give them any ideas. I don't think no. But this is one of the things of the property is that it was a bit of an ugly duckling as well.
Yeah.
That there was a smash window, it was a mortgagee in possession, and it did need a bit of work. So when owner occupied, and this is why the agent sold it, presented it to me before he sent it live, and this is a little bit ugly. I know owner occupiers don't want to see a smash window when they walk into a place. It needs to be painted. It needs the gutters fixed. It needs these little things. But as an investor, we need to see past that.
Yeah.
But one of the important questions that you have to ask a real estate agent is what terms do the vendor want? And this vendor was obviously a mortgagee in possession. So he just said, like, we just need to be a little bit flexible at settlement, because there's going to be a lot of back and forth between you, me, and the bank. And it's not necessarily the highest price that they want. They want an easy deal. And my goal then is to prove to the agent that you're a absolutely sound investor. You've already bought properties. You're a mortgage broker. You've got the money. You've got finance. It's going to not be a problem, and that we're going to be an easy person to deal with. And when you're a problem, like, you need to ask key questions to the agents. When you're an investor and you just come up, oh, hey, I want to buy this property. I'll give you a 60-day settlement. Well, is that what the vendor wants? You've got to ask the question and find out what the vendor actually wants, and then tailor your offer to suit them. To help that deal go through.
And fortunately I was quite flexible with that, but it was also a bit tricky, I must say. And just for our listeners, I want to share that story as well. I'm in a different position to a lot of other people in terms of risk. I'm willing to take bigger risks, whereas other people probably won't. And the reason for that is, now I own my own company, so I have the ability to earn more, right? So the more work I put in, I can earn more. So even if I'm over leveraged or if I borrow too much, I know that in time I can pay that down, even as interest rates rise. Whereas for a lot of other investors, the ones that are sort of working, PAYG, their income can only grow maybe 5% a year, whatever. They need to be more aware of this stuff. They can't jump in at 95% like I did. So I went in at 95% LVR, and I also took out a personal loan to come up with extra money, which is called gap finance. So I never recommend this to any of my customers. The only people that would really be able to do this is people that are disciplined enough to pay that back, and have the ability to earn more, so they're not carrying too much debt for a prolonged period of time.
And that's why the cash flow positive, that's why we specifically had to chase after a more cash flow positive property. It just so happens to be that it was bought under market in a great growth location, so you're going to have future growth as well. But at 6.8%, you can weather the storm of interest rate rises, even at a 90% LVR.
No, it's true. The interest rates have been rising a lot lately, but because of that high rental return, it's pretty much positive cash flow, or at least neutrally geared right now. So that means it's covering the costs of interest for the loan, because I did interest only, and it's covering the agent fees, insurance, council rates, right? All the outgoings. So a lot of people might ask that, right? They'll say, why would I do interest only and not P&I?
It's a good question, right? But from a strategy point of view, would P&I have helped you in this situation, or would have made it harder to borrow? Would you be able to even have done it on P&I?
P&I would have made me that would have meant I get a better interest rate to start with. That's the main benefit of P&I. But what that would have done was it would have put it into a negative gearing position. It meant that I'd have to come up with money every single month in order to hold on to this property. And that's okay if I've got lots of income, right? But because I've got a business that's growing, it's in the early days of growing, I really want the property to be self-sufficient. Right. And you got to remember that if you're paying principal and interest, that's not the requirement of the bank. That's your choice. The bank cares about interest. So they'll let you go up to 5 years interest only. And I've got a bank that will even go 10 years interest only.
Wow.
All they care about is making their interest and fees. So if you've got a tenant that's paying a good rental return or good yield, then the tenant's the one paying the interest, not you. Right? Because every principal payment is your equity. So that's not the bank saying you need to have equity. That's you deciding you want to have equity. So just because you're paying interest only doesn't mean you can't pay P&I. You can, but you do it because you want to do it, not because the bank makes you do it.
Well, then you can just put, and this is what I chat with some of my clients about this, because like, no, I want to pay P&I, but do that, but have an offset account attached to it. Is that kind of what you recommend for people?
So offset accounts are really good for that, because if the money goes in the offset, then you're not paying interest on the loan. But if it's P&I, it's not reducing your minimum repayment. See, a lot of people think, if I've got money offset, then my payments are coming down. Well, no. If you're in a P&I repayment, that's based on what you originally borrowed. Offset money is your money. Right? That reduces the interest. So if you've got an interest-only loan and you put the money in the offset, then your repayments will come down. Right? but your offset will be growing because the interest is going down. You're putting more money in the offset.
Yeah.
Right? So if you then decide one day, I don't want to use that money to invest into another property or to buy something, something else with that money. You want to actually pay back the principal. It's very easy to do. You just call the bank and say, look, I've got $20,000 in my offset. I now want to pay that straight off the principal of my loan.
Yeah.
You transfer 20,000 in, and then they do what's called re-amortization.
Right.
So then say it's 500 grand loan.
Yeah.
You put 20 grand in. Now it's 480. They'll calculate repayments of 480,000.
Yeah.
But you don't have access to 20 grand.
But you don't have access to 20 grand, and you've got that liquidity when you need it.
Correct.
If you do need it, you can pull 20 grand out and do whatever you want, buy another property. Well, I guess I'll just leave the listeners with this. When it comes to buying a property, because we want people to go out there and buy their own properties. I'm not just saying the buyer's agent is definitely not the only way of doing it. If you've got the time, energy, and resources and the availability, jump on the phone quickly and talk to agents, talk to brokers, and all of that stuff. So for the way I like to look at areas and locations is using a framework called FAB. So it's fundamentals, analytics, and boots on the ground.
Oh, okay.
Yeah, it's a little bit like it's just.
Did you come up with that?
Yeah. my wife's British and they say fab a lot. So, so fundamentals are things like looking at an area from a holistic point of view of what is the fundamentals for this area, like what we did for your property.
Yeah.
Is there employment? Is there growth? Or like where is the growth going to come from? What are the drivers of demand to the area?
Yeah.
What's the population? What infrastructure is going in? Those type of things. Then the analysis is the hard data stuff. So supply and demand, vacancy rates, where is everything trending from a data perspective? And the data leads you to the location. The location does 80% of the heavy lifting and it gets you there to that place. So you go down to that location. And the most important thing to get that 20%, for us to achieve that result in that location was because of the boots on the ground. You have to fly. This is one of the largest investments of your entire life. Fly down to the location, meet some of the agents, meet some of the property managers, meet some of the inspectors, ask people about all of the areas. What do you think of here? What do you think of there? Yeah. And then all of a sudden, are they going to want to speak with that random investor from Sydney, or are they going to want to speak to the person they met a couple of weeks ago talking about finding an investment property? So I think boots on the ground is so crucial, and you're spending hundreds and hundreds of thousands of dollars. Just get out there, jump on a flight, and you get a free holiday almost. Well, you can't write it off as an expense, but
I must say I took a risk buying Tassie because I couldn't fly down even if I wanted to. There was lockdowns.
Yeah. Oh, yeah.
And when I told people that, I bought Tassie. Oh, have you guys been there? No, never. I'm like, what? You bought property in Tasmania, never been there? No, they're like, how do you know if it even exists? I'm like, it's a good question. Well, I did organize an inspection, and the good thing about the property manager I used, she also did the videos, so she recorded the inspections. So it wasn't the selling agent that
very important.
was hiding things. It was showing everything that was wrong, and then she gave me a detailed list of what were going to be some of the costs that will come up that I need to be aware of. You did the same thing, but it was with a
with the right team, right? You gotta have your team built.
Yeah,
you got to build the team and then test them and see if they're good.
One other thing I want to share actually about Adelaide. So I like this story because it's actually worked out for the property manager. You introduced me to the property manager. Great guy. He had a contact that was going to do the paint, right? He went out, quoted to paint the entire place, 4-bedroom house. He said it was going to be probably around the 10 grand mark. I think maybe just a little bit under. And I didn't want to spend that just on painting. I had other work to do, right? To get rid of that shed and fix that window. So I spoke to one of my clients who's based in Adelaide, and he told me, and I told him the story. Well, I actually told him the predicament that I was in. And he said, I recently got my house renovated. Why don't you talk to my painter? He's great, did a great job. He's Brazilian, and my client's Brilliant. And he went out, he quoted it up, 4 grand. Property manager couldn't believe it. He's like, what? Nah. He goes, nah, for 4 grand, he's not going to do a good job. I'm like, well, he did a good job for my client, so let's test him out. He went out, he did it, he got it done in 2 days.
Wow.
And the property manager was like, wow, like I'm really impressed with that. He's like, I'm actually going to start using him for future jobs.
We use him for all our painting. He's the best.
So now he's got future work, right? Recurring income, better deal for the investor. and obviously the property manager. So it's a win-win-win scenario. And for you, because now he's
part
now
of your
great
contact. And this is the thing, you didn't have to lift a finger for any of this renovation stuff.
Nothing.
You didn't have to do anything. We get it all kind of set up. And if there's little things to fix, we just make it a part of the process. And I think just communication throughout the entire process. So, I like to think you're kind of handheld throughout the entire journey.
Yeah.
You're in control. You're in the driver's seat. You make the decisions of, yes, I want to go for this one or no. But you're kind of handheld through the entire thing.
Well, that's what I like also the way you operate, because you said not all buyer's agents are the same, right? Some of them are really large and they're out there all over the shop and they're helping, supposedly helping a lot of people. But I think when you kind of give more of a tailored approach and you're there holding the hand all along the way, you can actually answer all the questions and just also give guidance. Like I didn't know exactly where to buy. Like we didn't know what to look for, but you helped us, me and my wife, So thank you.
Yeah, thank you, mate. No, thank you for trusting me with it. I think we got a stellar job and it's been awesome.
Yeah.
Looking forward to the next one. We'll make it happen again.
Yeah, definitely. Yeah, and I also wanted to mention that I met Joe through a mutual contact, Steve Polisi. Great guy. You do quite a bit of dealings with him.
Yeah. I mean, commercial, this is how portfolios kind of get built out. They start in the residential space and then you need that cash flow play, which is where it then lends itself to commercial property. And this is where Steve Polisi is an absolute expert and legend in the space. So he is by far the best if you're going down that commercial route. Yep. Usually you build your portfolio resi, boom into commercial, and he's a great handhold.
Yeah, I was actually thinking about getting commercial, but then I thought about where I'm at in my life and in my journey and my financial freedom timeline, and it made more sense to get residential right now.
Yep.
Higher leverage, 95%.
Yep.
If you buy commercial, you need a larger deposit.
Massive.
And also, it's harder to extract the equity from a commercial property if you want to keep growing. It's much easier to take out residential.
Okay.
Yeah, so. Alrighty. Well, I think we've covered up a lot. No, I really want to say thank you for coming on the show. I think you shared some really valuable insights. I think the listeners will be pretty privileged to hear some of these. I don't think you've gone into this much detail before, have you?
Not as much, no. Yeah. But thanks for having me here. Hopefully it adds value to anybody that's listening. And if you guys have any questions, just reach out. Join the Oz Property Investor Group. It's not about my business. It's about people growing as investors. And great. Let's do it.
You heard that, guys. So look up Joe on Property Principles and Oz Property Investors on Facebook. You can join the group. You have weekly live webinars. You bring on guests. I've seen quite a lot of that. I've actually connected to some of your contacts because of that. So highly recommend. You can actually read a lot of the comments from other investors as well that share some insights.
Yeah, everyone's at different stages. You've got multi-millionaires with 20 million plus portfolios, and then you've got people that just bought their first and just got their second and are struggling and have lots of questions. And there's no question too silly because everyone started somewhere at the beginning and everyone just wants to help them through the process.
Yeah, that's what I love about it. It's really a community of helping each other. Yeah, awesome. Well, if you guys enjoy that and you want to hear future episodes, please follow my podcast, follow my channel. You'll see me on all the socials and looking forward to the next episode.
Love it. Thank you.
Cheers.